Hey guys, doing dishes, believe it or not. But we're gonna talk the market right now. Just getting everything out of the way, getting ready for wifey to come home. You know, my schedule's been crazy while following the markets this morning, and then overall, just the economy itself. There's no real data coming out because the economy's closed. So people are trying to guess what's happening, and I've used some real indicators myself. You know, it looked like everybody was not hiring this past month. They all announced they're going to be doing layoffs, which is new to me in a way because I've only seen it happen one other time. Just so that we're clear, I can give you my background so you know that like I'm not just like not paying attention to numbers. In 2019, recruitment itself was at a tail off. Like it was waning off, and you saw a lot of companies start changing their C-suite and start announcing layoffs, like mass layoffs, 2019. But then COVID hit, so kind of masked like this recession coming. And then of course they printed out $6 trillion, and then you guys know what happened with the US economy, not to mention the world's economy, right? But the reason why I know retail, or we know why I know retail, that I have experience in that, but the reason why I know recruitment is because I have experience in recruitment. I used to be the national sales executive for recruitment advertising for USA Today, Curvelo.com, for Gannett. And it was pretty awesome at the time, you know, learning, you know, companies' hiring practices and their budgets and why they do things. So I'm at like a standstill right now, thinking about this economy and thinking about why I want to invest into certain things, or if I can see a trend coming, because it's really tough. You know, the government shut down. There's a lot of data that's not going out to the public, and you guys can't really measure it. So people are guessing what's happening. You know, they're using other indicators. They're crowdsourcing. So you see a drop off in certain things. So like for me, I do the same thing. If I see a drop off, and I'll give you the example, you had a lot of tech stocks announce layoffs in October, the end of October, that, you know, was their earnings report just this past week. And everybody announced layoffs. I didn't see anybody announce that they were hiring. I just saw everybody say they were going to let employees go, which is a real surprise to me. It's like even retail, even Target. Target said they're laying off people, and I was like, wait a minute, these are like extreme red flags, right? Like you're trying to make a number, I get it, but you're walking into Black Friday, you're walking into Cyber Monday, and your name is Amazon and Target, and you're doing mass layoffs, like thousands and thousands of people. So I said, wait, these are the signals that I've been waiting for like my whole life, right? And excuse all the noise, I'm just doing dishes and being proficient. But I got the dishwasher going, and I'm doing dishes by hand just to make sure, because like there's little special things I don't like to stick into the dishwasher. Anyway, so my point is, I've seen some signals like in my day, and today was like a big red flag for me, just because I went to stores and I saw some sales, and I started figuring stuff out. And I go, wait a minute. Everybody's prepping for Black Friday, but no one's hiring for Black Friday. And the uptick in hiring that they're doing is not going to be able to handle the influx of people, but they don't really care. They're trying to make a number, right? And the way you actually control your number is payroll. Payroll is the biggest expense of any company in the world, like this, like what we're dealing with, that's based off of the macro environment you're stuck in. But like I said, I haven't seen people hire like this and or not in years, whether it be 2019 and then before that, I would tell you 2009. 2009 was the year where I saw budgets get cut short, commission sheets come in, and they're like, you're not gonna make any money this month. And that's for multiple companies. So if you've seen it, companies are gonna have to get creative to make money. So you might see some power advertising, you know, once in a lifetime, buy one, get one free type stuff. I wouldn't see it being something that could carry through. It's just, I'm going to explain to you why I'm telling you this. So Wall Street doesn't have an indicator or a pulse on it right now. But what they do have is they have so much money that's concentrated. They call them the Batman stocks, you know? Berkshire Hathaway, Amazon, Apple, Tesla, Microsoft, Google, which would be Alphabet, NVIDIA, all of it, right? So those are the Batman stocks. And for them to be concentrated, 40% of the market to be concentrated in just 8 stocks, you know, that's a very big problem. And I'm going to tell you why. Not that because one downturn could make it all happen. It's China could make it happen. Trump could make it happen. You know, we had a recession previously, just what, right before tariffs hit. And I don't want to say a recession. I just mean we had a huge drop off. We had a 20% drop off on the market because of DeepSeek. You saw $1 trillion of market cap go out of NVIDIA and then back into it to pump it even higher. We've had 6 consecutive months of wins. 6 consecutive months of wins on the S&P. Where's the pullback? The pullback's now. The pullback's right now. And people don't see it that way, but when you want to call it a win, right? Like okay, we're going to take profit. We're going to take it. We're going to do this whole Santa Claus rally, let it run all the way to Christmas. And then we're going to show end of the year profit, because unlike long-term investors, if you're just Wall Street and you're a stock bro, you're Brad and Chad, you want to show that you made a great year. You want to take gains. And those gains are right now. Look at this all-time high. Everyone's selling. And then they're just churning. And someone's going to hold this bag at 207 on NVIDIA. Someone's going to hold the bag at 250 plus on Apple. Someone's going to hold the bag on numerous, Batman stocks. But here's the thing. When they all decide that this is it, we had a run. We just had 3 years of greatness. I'll tell you what you haven't had in the history of the stock market. 4 years of greatness. You've never had 4 years run 20 plus percent. But that's what they're looking at. They're looking at every year 20, 18, 15 plus. At some point it has to retract. And it's as if everyone's in lockstep. Everyone's saying, hey, we're all going to pull back now. And it's going to happen right now, November, December timeframe. If you go look at what happened to Bitcoin, I know what happened to Bitcoin this quarter, this month. Bitcoin traditionally, since 2013, has had a 18 to 13% increase every October. They call it up October, October up, whatever they call it on Bitcoin. Well, the only difference that's happened to Bitcoin over the last year, if you guys are not familiar, the only thing that happened to it, why it wouldn't be up, is numerous companies started adopting a Bitcoin-backed treasury. So, what does that mean? That means companies like MicroStrategies, who says, hey, I got a great idea. We're just going to borrow money to buy more Bitcoin, and we're going to make more percentages back than what we owe. And it's rinse and repeat. Well, I've always told you it's hard to get your company to be in the S&P 500 like MicroStrategies is trying with this Bitcoin play. And if you guys aren't familiar with the Bitcoin play, Michael Saylor and the boys, they started borrowing money to buy more Bitcoin. But it wasn't what you thought. It wasn't because, and I honestly think it was the short sellers giving them the money themselves, because it's not what you think. Michael Saylor didn't buy Bitcoin at 20,000 like he could have in 2022. When the market was down, remember this, when the market was down and it was in a recession in 2022, literally he could raise no money. And that's the truth. That's what I've always told you guys, that if you are in a down run, all the people who say they're going to buy the bottom, they can't buy the bottom unless they have cash. You just can't do it because no one's willing to loan you the cash. Everyone's going to look at you and say, you know what, you're a fraud, you're not worth it. And or they're not willing to take the risk because, hey man, we can't borrow money right now, we can't loan out money. Look at this market. How can you explain it, right? So the only two companies that I know with cash that everybody wants to be a part of is going to be, well, I would give Amazon because they do have some cash. But I'm going to tell you, Berkshire Hathaway has $355 billion. $355 billion. 1/3 of their market cap is cash. That is phenomenal. Warren Buffett, you're doing great. Problem is, he's been getting downgraded this whole time while he's not deploying the cash, which he doesn't care about. He has his Buffett indicators. And that's all he cares about, okay? Is not overpaying for something, not leveraging himself, being very secure with his investment, and it's going to all turn out great for Berkshire Hathaway because they have the money to do it, right? Excuse all the extra noise, guys. I'm sorry. But duty calls, wifey's out here telling me what to do in a good way. Wife's always, did you do this? Yes, baby, I did. This is how you stay diamond hands, bros. Have a better half doing it with you. Okay, anyway, back to the story. So This is what's happening with Warren Buffett. And the other guy obviously is going to be Ryan Cohen at GameStop. And the reason why I tell you Ryan Cohen at GameStop, because cash and marketable securities, which would be Bitcoin, like he has, digital assets, whatever, they're sitting on around 9.2, if not higher, 9.3, 9.4 billion dollars worth of cash and marketable securities. Well, their market cap's 9.8 billion. So, yeah, I would like to buy the company that's over 90% cash and marketable securities. Not to mention they make a profit, and it's just a great value. It's hard to find a company you can buy dollar for dollar cash value for your share. Very hard to find, certainly today, when everyone's leveraged, everyone's already deployed their cash at the highest metric. And then you look at somebody like MicroStrategies, right? Back to this story. MicroStrategies is borrowing money. They're borrowing money when everyone's okay to let you borrow money. And MicroStrategies is spending money to buy Bitcoin. All right, how does that play? How does that hurt them? How does it help any other company? Well, here's how it hurts them. This morning, the S&P came out and gave them a rating of junk bond, saying that they're a B- on their credit rating. And you shouldn't be investing into them because they can't pay back their debt. That's what it said in all ways but one. And you can frown upon it all you want. Bitcoin's down to 105 today. Now, the reason why it's down to 105, my opinion, is because GameStop owns Bitcoin. And if you know the whole market's short Bitcoin, the whole market's short GameStop, well then, if you come to that conclusion, then you would understand why this whole market has to have it valuated so high. Why they have to do circular finance, why they have to do these things. Because the short against GameStop is losing. Now, a long time ago, we knew it to be 200 and plus percent, whatever it may be. I don't even care. I just know this. There are signs that fraudulent lending has been happening on this market. There are signs that circular finance and special deals are being done behind the scenes, and they're all without detail. Why? Because every single deal that's being done is not being explained in detail, right? First Group? Is it First Group? I can't remember right now. First Group Global, something like that. Tricolor. All these companies are doing special finance, and they're not explaining the deal, what they're trying to actually cover up. So let's think about it on a new term right now. The whole market is about to be open, to this short. It's going to be exposed because nobody has done the due diligence to say, you know what? GameStop's dollar for dollar the best value ever. You're buying GameStop for $9 billion market cap, and that's how much cash they have. So at $22, you're praying and hoping that they don't keep it. But here's the thing. When everyone agrees to go ahead and let the market come down, because they're all going to run and change their ideas, whether it be China beat you on an AI chip, or the next company decides to say we're in a recession and they're not going to go about. Somebody has to admit defeat. Sooner or later, it's going to happen. When that happens, because the money's so concentrated at the top, it's going to hurt really bad for the markets. And people would think, well, GameStop's going to come down then. If the market comes down, GameStop comes down. I'm going to tell you no. I'm going to tell you the only reason why GameStop's down at any given time is because it's pushed down, not because of the market conditions. If that were the case, then GameStop should be at an all-time high right now because markets are at an all-time high. But GameStop doesn't move when markets go up. So therefore, it should not move when markets go down. The only thing that's been happening to GameStop over the last 5 years, it's been going sideways essentially, with a couple of spikes here and there. But as it goes sideways, something keeps going up as you keep holding and you keep sitting there. Just remember that the whole market goes up, and it's been going up, and you've had every reason to be discouraged, disgruntled, and even vindictive. And say, you know what, Marantz, this is a terrible investment. It's never going to happen. It's never going to work. I'm just going to remind you guys, when it looks bleak, when it looks like the whole world's against you, common sense must prevail. There's enough cash on the table right now for GameStop to be dollar for dollar cash. That is not the company. The company makes $500 million. And they're netting something for all that cash. They're netting something for their ops. they're netting cash. So if that's the case, then you're having a PE ratio of around 2 to 3 on top of cash. It's unbelievable. Unbelievable to get the value you're getting for GameStop. When Wall Street wants to say the truth, that's cool. When another rating agency wants to start giving GameStop a rating, which how does a Fortune 500 company, a S&P 400 mid-cap company, a company that does over $3 to $4 billion worth of sales, how does that company that generates so much revenue and income and you name it, how does that company not get an analyst rating? Because they're afraid to tell you the truth. Because they can't tell you the truth against their positions. Everyone is against GameStop. You show me someone for GameStop and I'll tell you that not everyone's against it. But there's no one. I'm the only analyst that's going to tell you. And you're not an analyst. Guys, we've been telling you what this stock is for a long time. And right now we're approaching 5 years of investing. And this is the best value you're ever going to find. $22.08 right now in the overnight. I'm looking at it. And $9.9 billion worth of market cap. When you take in the convertible notes and the warrants into consideration, GameStop's approaching $11 billion cash. And the market cap's $9.9 billion. We're right. The market will correct. The collateral and the mishaps that they're hiding and all this, gymnastics of finance will come out to light. But the reason why they're not so transparent, the reason why they're, reluctant to admit defeat is because all the signs of weakness, all the cracks you've seen over the years, it's really going to open up. And I know it. I know for a fact that it's going to the moon. And I know it's going to rip, and I know it's going to tear the face off because the value's not correct. Palantir gets valuation you've never seen in your life for what they do. And those companies are very similar to GameStop in numbers and fundamentals. But for all these other companies get 200 billion, 400 billion valuation under the belt, they can't even generate a quarter of what GameStop's generating just off of offerings. Sheer offerings. Like, to give you an example, a company like Palantir has 2 billion shares, guys. 2 billion share float. If they offered shares to the public, how much would they generate? How much money would they generate? Are you willing to dilute that float? Cool. You're already at 2 billion. GameStop's at 447 million shares. Could you imagine if they were to dilute even more and offer it to the public? We still have 300 plus more shares to go. 300 million plus more shares after the convertible notes. So you mean, and even after the warrants. So if we have 325 million shares to go and we're averaging around $30 per share, that means we still have $10 billion worth of cash and market cap to increase from the number you see today at 9.9 on 9.2 billion. We will have $19-20 billion worth of cash. And what's your market cap then? What are they going to tell you then? We have plenty of room to keep going up and up and up. Plenty of time, by the way. I'm so excited to see this market crumble for all the right reasons. Now, I know 401ks will be lost. A lot of people are going to lose their money. But all that money isn't real money anyway. It's just fictitious circular finance. And they've been pumping themselves up for a very long time. But the signs are there. Pay attention. Read the papers. Figure it out. Or just keep watching the show. You guys have a great and blessed evening. I'm tired. I just finished dishes. I finished the yard. I finished life. I'll see you around, millionaires. Peace.